After you apply for a home loan, what really happens next? Okay, here's the truth. I have a very good friend. She's purchasing a brand new construction home, which means that in order to get the incentive, she has to work with their preferred lender. Totally get it. And I'm super excited for her, but she is blowing my phone up because her loan officer has ghosted her. And it got me thinking, well, that's not how the Kelly Zitlow Group rolls. There may be scenarios out there where you too could be in this situation of just not getting the feedback or the information that you need. So I thought it might be helpful to kind of walk through what's really happening after you apply for that home loan. So first and foremost, know that whatever lender you're working with, for us on the Kelly Zitlow Group, we like to have a phone call. I know, call us crazy or old school, but in that phone call, we're better understanding your goals, your objectives, your pain points, what's going on in your life, anything coming up. All of this helps us to be better strategically for you. But if you're in a situation where your loan officer or their loan partner on their team is not calling you and having this conversation, that's okay. They're going to ask you to complete an online loan application. I would say 95% of the time, that's kind of the current mode of operation in the mortgage industry. So just like my friend, she was sent a link, she filled it out, now she pushes the send button. And then she doesn't hear anything. And she's waiting and she's texting me like 100 times a day. Kelly, I haven't heard anything. Is that good? Is that bad? I'm like, it doesn't mean anything. Unfortunately, they have not communicated with her in a way that I believe is so important, but it doesn't mean that it's bad for her home loan. So here's what happens. When the loan officer, when that lending team receives the actual application, the next step is they're going to review it and they're going to pull credit. They're going to pull credit through the three major credit bureaus, TransUnion, Equifax, and Experian. And the credit scores themselves together with the credit profile. Keep in mind, it's not just about score. It's score and also what's going on in that credit history. The last 12 months to the 24 months, that can weigh that behavior, the pattern, whatever's happened, that could weigh into the loan approval decision. It's not just about score, but score is very weighted into the home loan process. So the lender pulls the credit report, and assuming that the score and the credit profile meet the lending criteria for the loan program that that person's applying for, then the lender moves forward. And now, just like in my friend's case, they're reviewing all of the documentation that she uploaded into her portal, sent it over to that lender, and now they're going through pay stubs, they're going through bank statements, asset statements, all the things that a lender has to do to really determine if the person is pre-approved, meaning that they can obtain financing based on what they know at that point of the conversation. So in this case, she still hasn't heard anything. She's under contract, by the way, to purchase this new home. She's closing in a couple of weeks, right before the holidays. She's kind of freaking out. And I'm just like trying to calm her down. It's okay. Asking questions like, have they said this? Have you received anything from the title company? Because again, once you execute a purchase contract, the next part of that is that your contract is going to go to a title company and an escrow or attorney, depending on the state you live in. And escrow is going to be opened, which means that this is the third party that's going to kind of manage all the funds. If you're putting earnest money down, the escrow company attorney is going to hold those funds. And when the lender funds the loan, it goes to the title company. So they're a very important piece of the puzzle, but that only happens once you're under contract. So let's go through that pre-approval. The documentation's reviewed. The lender now issues a pre-approval letter and says, hey, great news, you're pre-approved for this amount on this program. Here's some remaining questions or documentation we're going to need further into the process, but get out there and start shopping. Now, she actually went under contract on this new build before going through the pre-approval process. I do not recommend that, okay? Because that could also be part of this confusion that she's experiencing. But when you're buying new construction, it's very often that way. So the builder is executing the purchase contract with the consumer. At the same time, they're pulling in their preferred lender and they're saying, hey, preferred lender, can this person qualify? Real high level review. Yes, they can. Things proceed. But in a traditional, if you're purchasing a home without the new build kind of incentives that are out there, when you're purchasing a new home and it is just a resale, meaning a traditional seller selling a home that you want to buy, before you get out there and you start writing offers, it's just important to know where you stand. So you really get your arms around the required funds to close, what your payment's going to look like, what are some strategies that might be helpful to you. It may be important to know, hey, if you pay down this credit card, your score may jump, and that may be helpful to you from either reducing the cost of mortgage insurance or potentially even interest rate if it is a conventional loan. So there are things that go into that pre-approval that communication from the lender can be so helpful and just kind of understanding what goes on. So you're out there shopping, you find a home, you go under contract. What's next? The lender receives the purchase contract. The lender is going to go into their system and update the numbers, because I guarantee you 99% of the time, that price point or the property taxes or the homeowner's insurance, or maybe there's an HOA, or if you're buying resale, maybe there's solar and a solar payment associated. There's things that are going to be different at that point in time that the lender wasn't aware of when they did the pre-approval. Because when a lender does a pre-approval, they're essentially just using assumptions. We're assuming you're going to buy in this area, and here's the average tax rate. We're assuming here's the average homeowner's insurance rate. We're assuming you're going to buy in a community that has an HOA or it doesn't. And they're making these assumptions with regard to these dollar amounts, which are important because that drives your debt ratio, which drives whether you can qualify or not. When you go under contract, the lender is going to go in and tighten up all of that information. And so if the lender said, hey, based on this purchase price, here's what we think your payment's going to be, remember, you're not locked in on that rate either. So once the lender receives that purchase contract, this is when they're going to tighten up all the numbers. They're going to look at current interest rates, and then they're going to be in touch with you about your locking strategy and about just anything else that's going on. Maybe your payment's gone higher from when they pre-approved you. Maybe your payment's gone lower from when they pre-approved you. Maybe the interest rate's gotten better. Maybe it's gotten worse. So that is a pivotal time when you're under contract that you're having some communication with the lender. Now, again, these big tech companies, they don't necessarily talk to you. They just don't. So what's going to happen is if they're in a ghosting situation, they're just going to send you what's called a loan estimate. And a loan estimate is going to be this federally regulated form, first of all. So it's not necessarily intuitive. It's a little confusing, by the way, but its intent is to disclose to you as a borrower what your costs are, what your projected or locked interest rate is, what your projected monthly payment is going to be, all of those things, what your expected cash to close is. Now, lenders are required to send that once they receive a certain amount of information. Generally, we have all that information until we receive the property address. That's what triggers getting that loan disclosure out. Lenders have 3 days from receipt of all of the 6 items to get those loan estimates out. Now, sometimes that loan estimate could be your interest rate's floating. That's okay. Sometimes your interest rate's already locked. It kind of depends on how fast your close of escrow is. For her, the builder was offering an incentive, so they automatically locked in her rate prior to sending her that loan estimate. But in a resale type of traditional buy-sell environment in real estate, the loan officer is going to contact you and get into a locking strategy. They're going to quote whatever the current market rates are. They're going to discuss your close of escrow time frame. You can close outside of a 30-day window, meaning that maybe you have a long close of escrow. Maybe it's 45 days, maybe it's 60 days. And you can lock that far out too. The difference is that the longer the lock, the more expensive that rate will be. So it's one of those things that where the close of escrow date is so important to the locking strategy. Let's say you're under contract and maybe the lender locked your loan under a 30-day lock, meaning you were closing within 30 days. But then something happens during the process that now you're not going to close in 30 days, which means you're going to have a lock expiration. There's little things that happen like this during the process. So we do our best to really understand time frames, close of escrow frames, maybe the inspection's being delayed. So we're having communication with your real estate agent just to really kind of ensure that we have a very sound locking strategy. Okay, So that loan estimate goes out, as I mentioned, and now you're cruising along. What happens next? I mentioned this a little bit earlier, but debt to income ratio at this juncture is so important to your maintaining what was a pre-approval now to getting a final loan approval. There's different layers of loan approval as you move through the process. So the contract's in, we've updated all of the numbers. Now we're reassessing your debt to income ratio, and we are going to run that loan, your loan, through what's called an automated underwriting system. And essentially, it's just that. It's a standard system, actually, that's used across all lenders across the country for, I'm going to say 98% of all home loans. And there's reasons why lenders use these automated underwriting systems. Essentially, it's because they have reps and warranties, and the investors that they sell these to, if you use the automated underwriting system, it protects the lender. So that's one element. Also, sometimes these automated underwriting systems will allow for things that an old-fashioned manual underwriting approach won't, meaning they would essentially allow for a higher debt-to-income ratio. So the file is sent through the automated underwriting system, and to be consistent with the pre-approval, it's also sent there. Now it's just updated with the current terms of your purchase with the current taxes, insurance, HOA, solar if it applies, updated debt-to-income ratio, and now that loan also has received the approve eligible. Now, at this point, generally the ops team, that team that is so important to getting you from this juncture to the finish line to get your keys in hand, and this team is just an extension of the loan officer. So at this point, the loan is generally going to a loan processor. The loan processor is reviewing all of the information. They're going to see if the documentation that you provided is updated. If not, they're going to send you a list of documentation that's going to need to be updated to get to that final loan approval mark. That's what you want, final loan approval. They're going to prepare your loan, and then they're going to submit it to underwriting. Now, at the KellyZitlowGroup, we're big on communication, as you can probably tell, because I don't want to be one of those teams that, we ghost people. That's just not who we are. Strategy and communication are the key. That's the value of working with us. So when we are now into that processing stage, our client coordinator is in touch with you. You're going to know what's happening. Now, maybe there's no news is good news. This also happens if you're working with a team that isn't big on communication. So again, back to my friend who's buying the new house. She's like, I haven't heard anything, and it's been 8 days. Do you think I'm going to get my keys? I'm like, it doesn't mean anything. It just means that they're doing all these things that I'm talking about. They're just doing all these things, and it's moving on the system. Is it right that they haven't communicated with her? I don't think so, but it's not my mortgage company. I think proactive communication is important. And sometimes this is what I tell my team. Hey, even if we don't have anything to say, just a reminder, your loan's in underwriting. Here's the next steps. Here's what we're expecting. We're expecting your appraisal next week. Just high-level communication. I think we all appreciate that. So during this process, your file has now been submitted into underwriting, and very likely your appraisal's been ordered. Now, the appraisal is a big component of the final loan approval. So when the lender receives that appraisal back, you're going to be notified, and you're going to be notified of the value, and you're going to receive a copy of the appraisal. Now, let's say that the house appraises at or higher than your purchase price. Then everything moves forward. But let's say the value, the market value on that appraisal comes in less than your purchase price. Now, your lender is going to be in touch with you. And if you have a real estate agent, be in touch with a real estate agent. Or if in her case, she's buying from a new build, be in touch with the sales rep of the new build. Because now we're going to have to walk through what happens next with regard to that. Because keep in mind, from a lending perspective, the lender is going to lend on the lower of either the purchase price or the market value. And that's going to dictate funds out of your pocket, whether you end up paying more for the house than it's appraised at. There's a lot of nuances that happen at the appraisal piece. Appraisal is so important to the process if your loan requires one. Now, there are some loans out there that you don't actually have to get an appraisal. It would be up to you, but going back to that automated underwriting system, in some cases, it is reading all of the information of the area, the strength of the loan file itself, and sometimes it's giving a waiver. So you don't actually have to have an appraisal. You may still want one, and that's okay, but know that there are situations out there where an appraisal waiver could be in play. All right, we move forward, appraisal's back. Let's say that the appraisal has a subject to condition, which means that before that final loan approval, that something has to happen. Or maybe before the close of escrow date, especially on new builds. Sometimes because their production is so set up and timely, according to a calendar, it may be that the appraisal was done before, let's just say cabinets were put in. Well, that appraisal would come back and say, based on everything we know in the purchase price in this area, the house meets the purchase price, or here's the valuation of it, but the appraisal itself is subject to whatever conditions. And in this example, it could be that the cabinets be put into the home. The appraiser is going to want to go back out and check to ensure that the cabinets themselves have been put in, and that, because again, remember, the appraiser appraised the house with cabinets. So if those cabinets don't get in, then that could change the valuation. But subject to, especially in new construction, is not uncommon. All right, we're moving forward. My friend is getting more excited. Still no communication. So we continue. And now the processor has received loan approval with conditions. What does that mean? Well, it means that based on everything that was submitted to the underwriter, and the underwriter is the person in the loan process that actually reviews all the documentation, reviews your credit report, reviews the lending guidelines, and once the appraisal's in, reviews the appraisal, and they're going to be the one that says this loan is approved, or it's approved, but I need a couple of more things. Don't get freaked out with I need a couple more things, because generally, that's just maybe an updated bank statement, or maybe you're getting a gift from a family member or relative and they need the gift letter. Generally, those conditions are not deal stoppers. And I think a lot of times people are like, oh my gosh, they want more information. I tell this to people, be prepared, because until you get your keys, it's going to be more information. It's just how this process works. So in as much as we try to do as much as we can to get all the documentation up front, depending on the timeline, you're going to get paid again. You're going to get another bank statement again. Lenders have to source and verify your down payment funds, your closing costs. So throughout the whole process, things are happening. One other key piece here is that my best advice is whatever your credit profile and credit score was when that lender gave the pre-approval, try to maintain it. Don't go out and buy anything new. Don't buy a car. Don't, go to Home Depot or Lowe's and buy those appliances. Even though it's no payment for 18 months, it's still a new debt and the lender's going to have to do something with it. So again, just maintaining that credit profile until the day you get your keys and you close escrow and everything's been recorded and it's a done deal. Best recommendation is just not to mess with your credit profile. Certainly pay everything on time, because even though your credit may have been pulled 30 days ago, guess what? Lenders are still monitoring your credit until the closing day. So now you have approval with conditions, your appraisal's back, it looks good, and you get those remaining documentations back to the lender. The lender is going to review them. And sometimes, in my experience, the documentation doesn't necessarily come over in the format or the way that meets the lending guidelines. And this causes frustration with clients. It just does. I gave that to you. Well, you gave it to us and it didn't have the URL on the bottom of that bank statement. It's just not acceptable, because again, this is a risk-based business. Lending is. And so they also have thresholds of the documentation types, what's acceptable, what's not. So again, just your patience in this and making sure you get the clear communication from the lender on what they need, why what you sent isn't acceptable, so you can correct it and you can keep moving forward in the process. Okay, so we are getting close. Can you feel the excitement? I know. All right, so now you are, let's say you're within 10 days of your close of escrow date, and that means your closing date. I do want to make note that in some states, and especially with new builds, they like to have loan documents from the lender to the title escrow company days before the actual closing date. They like to have their buyers, and for us unless we're sliding into home plate or it's a fast close of escrow, we try to get those documents to the title company a couple of days prior to close of escrow. So there's no stress. You can get there. You can take your time in reviewing what you're signing. You can get your arms around all of your closing fees, etc. Now, closing costs should not be a surprise at this juncture. Your lender will be communicating with you. If they use a system like we use Mortgage Coach, we're updating Mortgage Coach once we get your homeowner's insurance in, once we get the final, property taxes in. We're updating that system so you can go in and look at it live to just monitor what's happening to your cash to close and what's happening to that total monthly payment. But no matter the system that lender uses, it's just important to make sure that you're keeping in touch with and you know how much money you're going to have to get to the closing table and how to get the money to the closing table. Oh, side note, fraud is a big deal. Guess what? There's bad people out there. And if you're wiring money, you want to be especially cautious. And I'm not saying this to scare you. But when you're wiring money, the internet is not a safe place. In as much as lenders and title companies and real estate agents, everybody try to make sure that we're using secured communications. Email is still a big part of the process. And so my recommendation is you're likely going to hear from your lender what your funds to close are. But those funds don't go to the lender. They're going to go to the closing agent, in this case, your title escrow company. And that escrow officer is going to reach out to you and give you wiring instructions. They're going to give you the dollar amount that you have to wire, or you can bring in a cashier's check. Again, make sure you're talking through that, but they're going to give you the amount. I'm stressing this because there are documented cases. You can just Google them. I've heard the FBI speak about this, where emails are exchanged. The bad people know, let's say this title company and this escrow officer and this lender, and they intervene and they send the consumer a new email. Looks like it's from the title company or the lender, and it says, hey, use these escrow instructions to wire your money to. Yeah, this is why I don't trust the email in this situation. Pick up the phone, call your escrow officer, call your lender. Just be sure you are dialed in and you have the right escrow instructions. We want to make sure your hard-earned money gets to the proper closing agent and not, redirected offshore to some bad person. All right, so now we're moving forward. You're going to get what's called a closing statement, a closing disclosure. That closing disclosure is going to reiterate all the things I just said. It's going to tell you what your closing funds are. It's going to reiterate what your payment is, what your interest rate is. It's going to walk through any credits that you might be getting from the builder or the seller. It's going to walk through your homeowner's insurance, your escrow account. Everything is on this closing disclosure. So it is a really important document, and you're going to want to be sure that if you have questions before going to meet with the escrow or the attorney's office to sign your final loan documents, it's okay. Call your lender. That's why we're here. And in our world, we like to proactively reach out to our clients and review that closing disclosure. We don't want there to be any surprises because it's kind of like, learning a foreign language. Like it's jargon, it's confusing, there's lots of numbers. And if you're not used to navigating that kind of document, it can feel a little overwhelming. So our best practice is to reach out to our client and to say, hey, your closing disclosure is in your email. Let's review it together, walking through all the numbers. So that way you have the confidence as you go into closing that you are set and things are good. And if there was a mistake, because mistakes do happen, if there was a mistake, you can get it corrected prior to signing your final loan documents. Okay, so we're moving along. Closing disclosure is received. You have clarity around the funds that you're going to have to bring to closing, and loan documents have been sent to the closing agent. They receive the loan documents and they are scheduling with you an appointment for you to meet with the notary and to sign your loan disclosures. Now, with technology going at the rate it's going, we are seeing some situations where you may not even actually meet a person in person. There's electronic closings that are starting to happen. It's still fairly new. I think it's going to pick up steam over the coming years. But whether that's a person on a video chat, whether that's a notary live in person, somebody's going to walk you through those documents. Keep in mind, generally, the people that are notarizing your documents, your closing documents that might be there with you, if it's not an escrow officer or it's not your loan officer, they won't really know the ins and outs of your loan program. So it's best to have those conversations back with your lender and not necessarily the notary public, because their job is to have you sign the documents. They can answer high-level questions, but anything intricate, they're not really the best resource to talk with about that type of question. And then they're going to just verify with your proof of documentation that you are who you say you are, who's the person on the home loan that is purchasing the home. Okay, now you are almost there. You are almost there. Depending on when you sign those documents to your actual closing date, someday it can be the same of, depending on the state you're in. Sometimes it can be you've signed those documents 3 or 4 days or 5 days before the actual closing date. So it's going to vary. It's not one and done when you sign your documents to the closing date, but the closing date comes. You've already sent your money to the title company. On the closing date, the lender is going to wire. Again, going back to why these wiring instructions are so important, let me tell you, we are double checking, triple checking that where we're wiring this money to is in fact where it needs to go. We wire your loan funds to the closing agent, and the closing agent is going to receive everything. They're going to balance all the money, and then they're going to record your deed and with the county. And then at that point, once it's been recorded, you now own the house. I know it feels like a long journey, but really this stuff moves much faster than I just kind of laid it out. But that gives you context. It kind of just gives you the backstory of all the things that are happening during the process. Whether you have a loan officer or a lender that ghosted you or not, it doesn't mean stuff isn't moving along. I, again, am a big believer that proactive communication is just so important. And I've built the Kelly Zitlow Group around that concept. At the end of the day, we want to be sure that our clients feel educated, knowledgeable, they know what's next, and that we're meeting that expectation. So if you have questions about any of this, don't hesitate to reach out or just comment below. I'd love to get your feedback. And hopefully you don't have one of those lenders that are ghosting you. We'll talk soon.